I am very pleased now to welcome Mark Hurd, our Chief Executing Officer, coming from the United States. Thanks for joining us, Mark.
All right, good morning. Excited crowd? Okay, let me just give you a time check. It is 2 a.m. in California, so I need energy from the crowd. You with me? You help me? Okay. All right, let's talk to you a little bit about our industry and some of the things that are happening in it. I'm going to start by telling you a little bit, not just about IT, but actually some of the things that are happening in the world that affect IT. And then a little bit about what's going on with new technologies and how they're being applied. And then are we going to do Q&A? Okay, and then we'll do as many Qs. I'll try and do As, but we'll take as many Qs as you've got, and I'll try and do As to the Qs if I possibly can. Okay, so that's what we'll do. How long do I have? Okay, let's see if we can do it. And they've got a clock right in front of me telling me whether I'm going long or not. All right, first chart. I thought I'd talk about what CEOs care about. And you know, I think a lot of folks think CEOs are thinking about all sorts of great thoughts, all these issues affecting the world. And more times than not, most CEOs are thinking about just surviving. You know, when you get into these jobs, there's an immense pressure. There's actually, I don't know how it is here now in Europe as much as in the US. The pressure has actually gone up. The amount of shareholder activism has gone up. The amount of intensity around short-term delivery of results has gone up. You know, when you're in a CEO job, somebody says to you, in this for long-term or are you in this for the short-term? The answer is generally yes. Are you trying to be efficient? Or are you trying to grow revenue? Yes. So this job is made up with a lot of doing two things at the same time. Long-term, short-term, grow revenue, become more efficient. A lot of pressure to deliver increase in cash flow and earnings. And if you can't do it, there's generally somebody right behind you that's going to try. And so more times than not, the key thing on somebody's mind who's running a company is trying to get to the next quarter, trying to get to the next year, trying to put the company in a position to survive, frankly, to get there before you can actually thrive, if that translates. So I think it's important to keep the mindset of the CEO in mind, because the CEO only has so much room for material transformation. Transformation's a great thing to try, as long as it doesn't cost you that short-term window you have to perform. So survival is a key element of any mindset that a CEO has. Next chart. Worldwide GDP, I'm sure you know this and thought about it this morning before you came here, $74.5 trillion. So that's the size of the worldwide economy. Next chart. IT is only $2 trillion of it. So 3% of the world's GDP is IT, which I think most people, when I present that number, find that to be surprising. I'm surprised that's not bigger. All these big companies in IT, it's small, but in fairness, it's 3%, but without that 3% of GDP, you don't get much of the rest of the GDP executed. Without IT, there's no internet commerce, there's no stock market, there's no airlines, there's no, virtually all the things we do during the day are somehow affected by this $2 trillion worth of spend. Next chart. Half of it's consumer, half of it's companies. Very dramatic change. So now half the spend is done by the consumer, half done by, you know, think of it as small businesses to the biggest companies is roughly $1 trillion. Next chart. Huge change in consumer spend. Consumer spend over the last 15 years has gone from $200 billion to this $1 trillion spend. And you see it in everything we do. It's you know, it used to be, you know, even 10 years ago, the data center of the home was a PC, a printer, and a modem. And now it's, it's all of these personal devices that all of us have. It's applications all over our personal devices. It's an incredible level of innovation in technology. Next chart. Not much has changed in company spend. So this is, again, another major development. Companies have been on about a 2% growth rate over that same time frame. So relatively flat spending, while the consumer has escalated materially. So if you're thinking about this as a business problem, I got a customer or an employee who's innovating, and I'm not. Worse yet, of the money I spend, 82% of it is spent just to keep doing what I do today. Cutting bills, closing the books, cutting orders. It fundamentally is maintaining the legacy environment while there's all the innovation going on around, particularly on the consumer side. Next chart. I hope this chart isn't, I don't try to make it too complicated. Can you open that for me? This basically tells you that companies are making money. This is the S&P, Standard & Poor's 500, over the last 7 years. And they have done okay. They just haven't grown. And the delta between those two lines, so look at the 4.91% CAGR in earnings per share, and the 0.74 CAGR in sales per share tells you what? Anybody know? People are cutting expenses. So expenses are going down. Revenue is basically flat. Earnings are going up. So back to the IT investment. Not a lot of extra IT. Remember that CEO I told you about? Thinking about this before this thing started, and I don't want to make this chart too complicated. The general bulk of the CEOs are averaging less than 1% growth. Like, yeah, that's great. It's not good. Okay, this is the time. It's 2 a.m. I need some energy in the room, okay? Come on, this is not good. This is not good. I can even know that at 2 a.m. It's not good, less than 1% growth. Last quarter, Oracle, we just reported, grew 7%. Wow, that's huge compared to this chart. Huge. And what do CEOs do when they have to keep their job? And they have to deliver earnings? They do what's on the red bar. They reduce their expenses. And they do it pretty well. Earnings grow, revenue's flat, expenses are down. So back to this whole sort of narrative I'm painting for you. A lot of innovation, particularly in the part of this new generation called Millennials that's coming into the marketplace. Lots of new tools, lots of new technology at the consumer level. Not a lot of growth in corporate IT, driven by this chart. Most of corporate IT is spent on the existing legacy environment. Next chart. It's a little bit of a build chart. I don't love this chart. I think the best message I can give to you is that probably what you see is what we're going to keep seeing. The blue line basically represents a continuation of flat IT spending. Business change, basically the red part, there's not going to be any slowdown in the amount of this business change as we go forward. And I'll explain that to you in a second. Next chart. This is, if you're running a company and you have consumers as customers, this chart is a real problem. So now you've got consumers that are coming on board that not only use your services, but they're willing to tell people when they have a bad experience. I'm sure this doesn't go on in France, but we have this issue in the United States as an example with all these technologies called Yelp. Is Yelp over here? No? Yelp. Yelp, let me tell you what Yelp does. It's really cool. You go to a restaurant, you don't like the restaurant, bad service, you go onto Yelp and you tell everybody what a bad restaurant it is. It's a thing called TripAdvisor. Bad experience, put it on the web. Everybody knows you didn't like it. These are big, I could go down tens and tens of these examples where consumers now have a forum to complain. They have a forum by which now to persuade people not to use the service. They can do it anonymously. This is not good. You know, when I was as a consumer, I would grow up and complain. I would typically complain to the specific supplier. I'd yell at them, be mean to them. I'd get a coupon, or I'd get something for my dissatisfaction. But I had nobody else I could tell. I could tell my mom, my dad, my kid. I could tell somebody. Now I can tell everybody. And I can tell everybody just like this, and I can even do it anonymously. And these disruptors, you know, all of this disruption with social, that's gone on between social media, everybody who's mobile. And by the way, the next generation coming, I'm not going to talk a lot about millennials today, but as a group, just give you an example. By 2020, so 5 years from now, 40% of the entire U.S. economy is in the hands of millennials. And this group of people has grown up with a different sort of mindset. They've grown up with these technologies, and they are very willing to complain. My generation, not so much. Certainly to complain in public. And this changes your ability to now deal with this customer in a more thoughtful way. It used to be, I went to graduate school in the United States in I shouldn't even explain when, long time ago. And when I went to school, they taught me that something like 95% customer sat was perfect. Don't try to make it too much higher, because there's always lunatic customers. And it's uneconomic to try to satisfy the lunatic customers. And this was taught in American business schools year after year after year after year. So all of us that are running companies have this sort of tape in our head from that time frame. I don't think it's true anymore. And I don't think it's that you want to now make these people 100% happy. I think it's those 5% of unhappy customers, you really don't ever want to have them. You prefer to just never have them than have them be unhappy, because the cost, to take our case, we're B2B, business to business. We have 400,000 customers. A simple 5% is 20,000 customers complaining. We can't afford having 20,000 customers complaining. So the ability for us to make sure we have the right customer when we get them, important, driven by a lot of this behavior that's changed. Next chart. I've told you a little bit about this. This is the millennials. I'm not going to talk a lot about them today, but these are really stats that are now becoming fairly global. So 50% of the workforce, I talked to you about 40% of the economy is in their hands by 2020. They're 50% of the workforce. By the way, next, look at this, 56% of millennials would choose flexibility over more pay. Now, I know I'm in France, but in the United States, when you see a reaction like that, your first reaction as an American of my generation is you know, like, what? What? You don't want more pay? This has been, again, culturally in the United States, you know, you want more money. So, like more flexibility. And of course, my reaction to that is, I don't even know what that means. You want more flexibility. I mean, what do you want to stretch? I don't know what you want. And so yet, this is how they answer. Now, we hire 1,800 college kids a year just in the US, and almost 5,000 globally. So we survey them, and we get a lot of information, and our surveys are roughly, by the way, this is global data, this is not Oracle data, but our data reflects this data. Same sort of feedback. 60% of them say they really don't want to leave a job in 3 years or less. It's a real problem. I worked for one company for 25. I've worked for 3 companies in 35, so this is 3 years. It's crazy. Crazy sort of changes in, now, that means they may want to leave a job, doesn't necessarily mean they want to leave a company, but you better keep these people fired up, interested, excited, moving, challenged, because their expectation is not to be anywhere too long. Also, And this is a United States stat. When you look at the economy, the retirement age, it wasn't 10 years ago. People were retiring at 57 and 58 years old. Economy was good. Retirement savings were growing. Now, it looks like it's going to have to extend. Today, currently 62, 63 on average, out towards 70, 72. Think about what that means now from an employee. If you're in HR or you have employees, you're going to have 22-year-olds all the way to 72-year-olds. You'll have 3 generations of workers in your workforce simultaneously. Somebody like me who's, closer to the one end than they are to the other end, who grew up, working with paper-based workflow. I think I'm good with technology and stuff, but I grew up thinking structurally, thinking asynchronously, thinking through paper workflow. Not my kids. They all work collaboratively. They work in groups. They message in groups. 2 very different environments. And then you have a group now, the Y generation, in between. So you've got 3 different groups of workers. By the way, you have 3 different groups of customers. All who work differently, who communicate differently, who think about the world differently, and you're not going to have to deal with all of them at the same time. So far, what am I trying to do for you? I'm trying to make sure you understand that there is a lot of change coming. If you think there's been a lot of change, there's coming more. And the reality of the economic environment says there's not going to be a lot of extra money to go invest in it. Let's talk more. Next chart. This is the reality of sort of what we sit with today. So let me go back through company. Company starts with the CEO, usually has a strategy. I think it's a good idea to have a strategy. So you got a strategy. What do you usually do around the strategy? You put a business model in to execute the strategy. Then you put processes to support the business model. And then applications automate the processes. So that's the first place where IT intersects with the strategy, is applications automate those very processes that you run the company with. Well, I got bad news on the apps. The apps are 22, 23 years old. 23 years old. So it's what, 2015? Philippe, I know I'm going to ask you a question now. 2015 minus 23 is what? 92. It's very good. This is very good. Guys slept. So 1992 is when these applications on average were built. So think about 1992. Was there search? Internet? Social? Nothing. Right? Pre-everything. Prehistoric, everything's gone. So all these applications were built with none of the current realities that we just discussed sort of in mind. So very old applications, most of which were customized to the processes of the company. Most of them changed, most of them modified, complicated, hard to upgrade, and all built back in this 92 timeframe. Now, needing to become relevant, needing to become able to deal with this new reality. And the question is, can that even be done? I won't even go into all the things that needs to be done to be more standard, to be mobile, and all of these great things that you'd like, but the reality is this is what we got. The further reality is you have to combine this with the other things we've discussed. S&P is what? Not growing in revenue, growing in earnings, which means expenses are going down. IT has remained roughly flat, even though overall expenses are going down. So IT has actually been growing as a percent of expenses in most companies, even though overall IT is growing 1% to 2%. Now, I've just hit you with a lot of data. It's a lot of data. But this is what is driving the global sort of economy right now and the pressures it's putting on the information technology industry. Strong need to redo IT, not a lot of money to get it done. I mean, that's sort of the reality of the hand that we've got. Next chart. Complicated chart. And now that I look at the chart, I know exactly what it means, but I'm sorry it's there. It's a little bit early in the process to get there. In fact, I'd like to think, is there another, let me see what the next chart is. I don't want to do that. All right, go back. Go back. This is a problem when you have too many charts. This is really where I see things happen. Let me try to explain to you why I think this is going to evolve the way it is and explain the chart, because it's a little more complicated for where I am in the presentation. There's this, you all heard of this thing called cloud. Have you heard of this? You've heard of this cloud thing, right? Big deal. You know, you go to Silicon Valley, where I'm from, everybody talks about it. If there's ever a problem in the world, every couple, 3 years, Silicon Valley introduces a word that will solve your problem. And the current word is cloud. Cloud will solve your problem. Now, let me try to explain what really goes on with this thing called cloud. There are 3 distinct elements to this thing called the cloud. One of them is basically applications. And it's typically called SaaS. I don't know if you heard this term SaaS, but it's software as a service. Applications as a service would make more sense, but when you abbreviate it, it comes up with a bad word. So that's if you ever wonder why applications as a service is called SaaS, it's because applications as a service doesn't sort of work for the marketing types when they put it out in the marketplace. So SaaS is really applications as a service. There's a second element, which is called, and by the way, applications are really things like ERP, HR, marketing, sales, et cetera, et cetera. Platform as a service is a second part of the cloud. It is basically development tools. You know, if you looked at IT as a function, a third of all IT is the development of applications. You'll hear it called dev test, all this stuff, but a third of IT is the development of applications. And that is fundamentally platform as a service, or called PaaS, which actually makes sense, platform as a service, PaaS. And then there's a thing called infrastructure as a service, which is fundamentally getting computers and storage in the cloud. Those 3 layers are the cloud. My view is that by the time you get to 2025, somewhere out there, most of this work is going to move to the cloud. Most. And most of the reason is because it makes economic sense. And I'll try to explain that to you just in a second in another chart. The key thing here is that you're going to have to be able to have on-prem applications and cloud applications at the same time. You're going to have an ongoing life with applications on-prem and applications in the cloud for years to come because of that legacy I described. Nobody's going to be able to move all those applications to the cloud overnight. It's going to take years. So you're going to be living with these cloud and on-prem applications for a long time to come. Next chart. I'm going to explain this chart. I'm going to use this as an example of what happened in the old world. When you used to get an application, let's call it from Oracle, or what's that name of the company in Germany who made, yeah, I can't remember that. So there's a company in Germany, and then there's Oracle. And the 2 of them are roughly tied for market share in big ERP. Clearly, I believe one company's much better. No, I'm not going to waste time on all that. So let me tell you how the old model worked. Give me that thing right there. No, just give me that piece of paper. That's all I need. That's all I need. Imagine this is a CD. So historically, we'd sell you an application and we'd ship you a CD. You'd get the CD, and that was really the beginning of the relationship. You would then take the CD, and you would hand it most likely to a systems integrator. The systems integrator would then modify this CD and implement it for you as a system. And that's what this chart sort of tries to reflect. In the meantime, you're implementing with all these changes. It could take you a year or 2 to make the changes to the CD and then implement the system. Meanwhile, we, back at Oracle, are working on release 2 of the application, and we send you a new CD. By the way, you get that new CD maybe now 2 years later. And guess what the systems integrator does? Starts to make all the changes that they made the first time through. That may take another 18 months. 3.5 years later, maybe 4, you've got now release 2. By the way, you didn't pay me anymore for the second release, but you paid the systems integrator twice. You paid them first for the modifications and second to remodify the next release for the applications. 2 checks to the systems integrator, 1 check to us, and then you have ongoing support from us that you pay. And that's sort of the economic model. And it goes on and repeats itself sort of for years to come. Is this familiar to you? I mean, this is sort of the model, how the software industry evolved. Lots of modifications by the SI, driven by you, because remember those business models and those processes. And most companies don't want to adapt their processes to the software. They'd rather adapt the software to their processes. That's fundamentally how the SIs built their business model. And they got in between, let's call you the customer and me, Oracle. They got in between you and me and built a relationship with you forever to extend your applications every time I had a new release. That's what this model describes. It takes a long time to get from the CD to go live, and then it takes just as long to go from go live to release 2 because of the length and the complexity of the process. That's the old model. Next chart. Very different now. Very different now. Now you subscribe to a service. You go live, hopefully something measured in weeks and months, not years, when you do it in the cloud. And I'm talking now specifically of the model in the cloud. There is no CD. You're actually now buying a service. By the way, what else is there no longer in the cloud when you have the cloud? There's no hardware. There's no operating system. There's no database. There's no middleware. There's no real IT staff on your premise. There is software coming over the network. Everything is managed for you. You will probably get 3 releases of the software. Let me repeat this, per year. Per year. There could be 200 to 300 features per release. We can argue how much of what's a feature, because everybody has a little different view of a feature, but 300 features per release. Philippe, if I gave you 3 releases with 300 features, how many would you get in a year? 900, that's very good. So this is good, you're having a good day. So 900 features in a year, could be 1,000 features in a year. Remember we talked about 3 years, 4 years, whatever it may be to get to release 2? By the time you get out there, you got 4,000 features. And you never did anything. You did no work. It was done by us. So this is a very, very different environment. The work really shifts from your IT budget to our R&D budget. Other important features of it, it's no longer sort of batch reporting with data taken out of an application, sent somewhere else to be queried. Now you have embedded analytics and intelligence in the application itself. This is all integrated. Very different. It's no longer these monolithic applications where you have to rip and replace everything. All of this is modular. You can buy a module here, a module there, as opposed to having to buy everything fully integrated up front. There's no more sort of customization. By the way, let me add something about the features. Remember I told you about the 1,000 features per year? You have a choice. You can take none of them. You can take all of them. Or you can take anything in between. Completely configurable on the features to your desire. So it's configurable and extendable. I'll talk about that in a second. No more big upgrades. The upgrades are done sort of as I described. They're sort of small mini upgrades done by us any time during the window, the period for an upgrade that you want. We don't do it all in one day. It's really at your choice within the window when to do it. No more customization. We configure the application. By the way, you do have the ability to extend the application. So very different from the old world. If you modified the application back in the old world, you changed it, I may no longer recognize your application. More than likely, I don't. Now you can build a module. Remember this thing I told you about called PaaS? With Oracle's PaaS, you could actually write an additional module, link it together via an API, and extend the application, but not change the core application. This is a lot more detail than I probably should get into, but I just want to give you the reason I went through it was I wanted to give you a flavor for how different this is. What a material change in the industry this is from anything we've seen over the last 23 years. Next chart. In the history of our company, I don't say this out a lot in public, but in 23, 24 years, remember I told you about these two companies, I can't remember the name of the other company and us, we've sold, 20,000-ish, a little less than that, big, relatively sized sort of ERP systems. We sold 1,350 in 5 quarters in the cloud. And is it because we're so smart and so good? I'd like to think so, but I think it's much more than that. I think it's not only that we've done a lot of engineering and we've built a real strong cloud-based application, but I think the bigger thing here is all the things I talked about in my first 15 charts. This is as much about the macro economy, more about how you want to invest, more about your strategy than it is just about software. Because remember what I said earlier, without, the money to invest in IT, who's going to give you the innovation of all those features if you can't raise your IT budget? This almost becomes as much of an economic dialogue as it does, and a business dialogue, as it does a technology dialogue. I will tell you, you've now shifted the work and you've bought an innovation engine as part of the subscription. People are going to come to work every day, and you now get the benefit, which you didn't before in the old model. Remember with the CD, you had to get the SI once they modified it to do it for you. Now you've got Oracle's developers basically adding features every single day to help you basically expand your capabilities as you go. I told you about the 300 features per release. How many people are now going live in the quarter? 58 countries. This is more of a commercial here in the end than anything else. But I think this is great for Oracle, but I don't think it's just all Oracle, although I'd like to take credit for all of it. I think it has to do with the realities of everything I talked about. Big changes coming. People work differently. People buy differently. People are not going to have the IT budgets to take these 20-year-old plus applications to the next generation. You need a different approach. This approach is cost-effective, it's timely, and it gives you an innovation engine that otherwise you can't replicate on your own IT budget. So, okay, I'm going to stop there. I've got 11 minutes to take any questions anybody's got. I've got a couple limitations. If you have a question, if it's in English, it's better for me. My French is rusty. It wasn't even that, sorry, you can help? Are you sure? You'll try to help, okay. So Laurent will help, and I'll take anything you got. Thank you.
No, I have a question for you, for the CEO that you are. I would like to know what are your #1 expectation towards your CFO for, let's say, the 12 coming months?
Yeah. So expectations of CFO, right? First, I think many responsibilities in the chief financial officer job. One certainly of it is, at the end of the day, we've got a big balance sheet to run. So in our company, like we reported last quarter, we have $56 billion worth of cash. It's a lot of money. and we have this big strategy of trying to keep it. And so, strategy one is to make sure we manage our balance sheet, we deploy our capital properly, and that we make sure that we get the optimal deployment of all the capital we spend in the company. Obviously, we spend $23 billion a year in expenses, in addition to the cash that we try to maintain. So that whole economic ecosystem is a big deal to us. Second, the ability for us to plan. So we run the company on, obviously, a quarterly, annual, 3- and 5-year planning cycle. Actually, not all of our employees actually even know the planning cycles we run, but we run actually 4 simultaneous planning cycles. We run a quarterly one, which we do our quarterly estimates on, an annual one, a 3-year view, and a 5-year view. And so it's important, that's a dynamic process for us. Every time a quarter closes, we refresh all 4 cycles as we go. We have sort of an immediate need and gratification that's required for analytics around our current period business. So the ability for us to understand what happens to us daily. So for example, on my device right here, we're able to, I can tell you right now, and Philippe runs a nice sized part of our business, and we communicate, frankly, through real-time reporting. So this second, if you asked me how much have we booked in the quarter, 2 weeks into it, I can tell you within 4 or 5 hours how much business we've actually booked, and I can forecast that into our whole quarterly view, which again would ripple through our entire planning process. So, I think balance sheet management is a big deal. The alignment between our P&L and our balance sheet, another big deal, and the alignment of our expenses, the alignment of our forecasting process, and the ability to provide real-time analytics to not just me, but to our entire company is really at the core of the CFO role at Oracle.
Thank you for your presentation. So this is a CFO Summit, so we are all in finance.
CFOs,
yeah.
yes.
And we believe in what you said. It looks very appealing for us. What is the reaction of CIO you may have? Because we won't be able to change
that's a great question.
that without the support of CIO. And sometime in some organization, you may have to cope with CIOs that are over 50. And just to describe before, that means that new cray one and are not familiar with new technology, white generation, and so on.
Yep.
So we'll need to have their buy-in. What are the reaction you have met in other presentations with CIO?
This is a great question. So all of this cloud stuff changes things dramatically. So for example, let's take the CFO or the chief marketing officer, or the head of HR. Typically didn't have a big vote in many cases in IT. Why? Because there was all this complexity on premise. You had to have the right operating system, the right middleware, the right database, the right quote unquote architecture. How many times have you had an idea, or somebody in the company's had an idea and said, this would be great to do this? And a CIO might say, nah, that doesn't fit into our long-term architecture, or doesn't fit into my plan. Okay, well, things have changed now, because on premise, there is no hardware. There is no architecture. All you're getting is IP, intellectual property, over the network. When you say, what's the hardware in the cloud? I don't know. Operating system, I don't know. Database, I don't know. Stuff. It's magic. It's just software over the network. Now, this has become a problem for an IT organization. Now, let me give you 2 pieces of this. In IT, there's been sort of a democratization now of the functional leader. The CFO now, I'd argue, gets democratized in this process because of what I just described. You're now free to make some decisions you otherwise wouldn't. Now, I don't think this is going to mean that somebody buys from 50 cloud providers, all of whom do a little different thing. Because you still, as a CFO, as you know, have to run the company not just this way, you have to run it this way. You have to get these processes to work together. So one of the things at Oracle that we've done that we think is important is to have a suite of applications. We couldn't just have a best-of-breed ERP. We had to have an HR application, a marketing application, a sales application, because I think in the end, there is going to be a role of IT who says, there's only so many of these cloud ecosystems that we can evolve into. 1, 2, 3, not 50. So I think the role of IT in that respect changes. I still think IT has a role because of the need to move data and align data across multiple applications, but I think that role changes. Now, you asked another question, which was the generational issue on CIOs, and I think this is a big deal. I don't think it's true just with CIOs, though. I think it's true with HR departments. I think it's true with CEOs. I think it's true with everybody in the C-suite that, frankly, we think of the world just like you would expect us to. We think of the world through the way we saw the world. And the new set of workers and customers think about the world, it's funny, about the way they see the world. And there's a difference between the two. I do think that begins to shift if you have the right sort of culturalization of listening. And I told you how we survey our employees coming in. I mean, this is a big deal to us. We survey the heck out of our employees that are coming in, trying to understand that, you know, they tell us things that are just different. I mean, they want to work on a deal, like when we try to sell something, they want to work collaboratively. They want to work with 10 of them in sort of a room together, just like they message in a group, right? Sophisticated tools haven't kept up with that pace. So I think it's not just the CIO. I think it's really all of us as a team together. But the CIO role is definitely changing based on the way this cloud architecture is headed. Yeah, thank you.
Hi, Mark. Bruno Berton, Accenture. Just wanted to ask you about in that world of change, the ERP value proposition. I mean, for the CFOs, the last 25 years was all about, you know, which one, the German one or the American one, and, you know, how complex and how many times and how painful it was going to be. But you're describing a world is changing so fast, where, you know, everything's about features, where, you know, technology is at a different pace, where you can get lots of stuff as a service. So what is the ERP value proposition? And obviously, being from Accenture, I have the same interest as you, as hoping there is one, but what would it be?
When you say the value prop to move, yeah, I think it is what I described, though. I mean, at the end of the day, the ability to sustain these monolithic ERPs is very difficult, very costly, very expensive. I hate to be as you know, how would I say it? Less strategic as just going to a TCO level, total cost of ownership level, but you're talking about knocking 50, 60% off your TCO in this environment. I mean, you're cut in half. So if you believe in what I described earlier, integrated analytics, modularity, speed of adaptation, ability to string out feature sets as you go forward, and I can do it at half the cost, I think it'll be I mean, you got companies, like, for example, you know, we've already got General Electric moving ERP to the cloud. If I told you GE was going to move to the cloud, you would probably say, there's no way. They're too big, too complicated. It's exactly why they wanted to move. HSBC, who we've announced is moving, a big bank, moving their financial reporting to the cloud. Why? Frankly, very delivered. You probably heard their CEO when he messaged their big change in their IT infrastructure, trying to simplify their IT infrastructure. So I think you can find one of the nice things about this is I can tell you 4 or 5 core reasons that are very different, and each one might move for a different reason. Some want innovation, some want a much lower TCO, some want simplicity. I mean, you can go right down the list of, this is just a very different world. I'll predict for you in a bigger way that by the time you get to sometime after the end of this decade, you could see, I'll go to 2025 I'll be safe. I predict for you 70% of the current workload in a data center will be in the cloud. And that what you'll have left on-prem are only those homegrown applications that I frankly can't find a commercial application to replace. And or I've got a regulatory issue or a compliance issue that forces me to keep it on-prem. Otherwise, I think people are going to move these workloads to the cloud at really incredible speed.
Do you think that ultimately CIOs and CFO would not need any more system integrators? And when?
Well, it's making people at Accenture very nervous. I think I think that's an interesting question. My first reaction is no. I think you will need people that can help you. Let me explain. I think the help changes. So the way most SIs built their businesses was the way I described. Here's a CD. I'm going to now take advantage of the unique processes you'd like, and I'm going to modify applications, et cetera. I think that role gets diminished in a big way as we go forward, point one. So I think that changes. That said, the ability to migrate from that environment to this environment takes work. And I do think there is a role for systems integrators in that process. Remember, if I said, let's pretend I'm right. Nobody has to agree. We're just going to pretend for a second that 70% of that work is going to move to the cloud. Somebody's got to help you get that done. Somebody's got to help you migrate that data. Somebody's got to help you interface that new cloud application to multiple other applications that this application is dependent on. So I think the interface work, the data management work, will create a role from systems integrator. Let me say it differently. Let me ask the question a little differently. Will the same systems integrators who did the first big tranche of work be the same systems integrators that do what I just described? I don't know. Because it's a lot like IT companies. Whether you're at Accenture or, name any other systems integrator you like, many of them like the old style of work. And many of them say, I'd like to hold on to this as long as I can, and therefore don't move as quick. Same way with IT companies, right? I'd argue that we've embraced this as the new way forward. I'd argue, because I'm thoughtful, just trying to give you a heads up. I don't think SAP's embraced it. I think they've said they like the old way better. And that's a difference in strategy. And I can get why you get there. Because it's hard to change. Remember this axiom if you don't know, everybody loves change unless it affects them. I love change. It affects me not, it's no good. But it's good if it affects you, especially if it affects you and that helps me. But if it affects me in a bad way, I don't like it. And so I think the question more isn't that, I think there is a role for SIs. I think it'll be very interesting to see which SIs push the envelope to be part of helping everybody get to this next generation of capabilities.
Compliance. Don't you think that model will put more pressure on the provider regarding the capability to deal with compliance?
No question. No question. We're going to be on the hook. So let me reiterate the question, make sure I say it right. Doesn't that put a lot of pressure on the supplier, in this case us, as it relates from a compliance perspective? There's no question, yes. We have to deal with data sovereignty as an example. We have to deal with protection of information. We have to deal with all of that, and we have to deal with security. Now, remember, from a security perspective, I'd hope you'd feel this, and let me try to make sure. When your data is in our cloud, we encrypt it. So when actually your data is in our cloud, and so let's pretend somebody hacked Oracle. It's not going to happen. But let's pretend, again, we're pretending because it's only 3 in the morning in California. And so somebody got in, they would find encrypted files. Let's do it differently. Let's pretend the Department of Justice called me up and said, Mark, send me somebody's data. I'd, of course, start, no. And then they said, well, I've got a subpoena. And I'd say, good, here's a bunch of encrypted files. Good luck to you. The key to those encrypted files sits with you, not me. So security-wise, I don't think you're going to find that if you're running a data center, we know how to secure data. We know how to keep data secure. As you see this evolution of private networks and all of that, data is going to be inevitably more secure in these cloud, certainly these strong professional cloud environments than they're going to be in an individualized on-prem environment. But there are other compliance issues too that we'll have to deal with that are regulatory, that are domestic, et cetera, and certainly we're on the hook for that. All right, I'm clearly now out of time. Thank you so much for coming. I hope this was helpful in some way to you. If there's any questions that we didn't get to, please let Laurent, let the team know. We'll try best to do it. Have a great rest of the CFO Summit, okay? Bye.